Give me 20 seconds and I can explain to you why you're going to want to stick around for this video, why you need to know why Robinhood was recently sued, how much they were sued for, who they were sued by, why this will definitely not stop Robinhood from continuing to use their clients as a way to make more money, and why I would never recommend Robinhood to any of my friends. One quick thing, you guys, I've gotten a lot of interest in my private mentorship, Young Money Investments. That is my private stock group where I call all of my trades that I'm entering, exiting. I give you one-on-one attention. I give you weekly live streams, all that great stuff. I've gotten a lot of interest in that. What I want to do is I want to give one member, probably a week, a free month membership to Young Money Investments private mentorship group. All you need to do to subscribe to that or get enrolled to potentially win that is comment down below, Robinhood did what? Like the video and subscribe to the channel. If you want, you can also follow me on Instagram at Young Money Investments, but that's not a requisite in order to win the private mentorship and be able to learn and trade with me on a daily basis. All right, you guys, so if you are like me, you have used Robinhood before, you might still use it, you probably thought about using it. Robinhood has really gotten extremely big over the past 6, 7, 8 years. Robinhood, I believe back in maybe 13, maybe was when it finally came out. Robinhood is a trading app, and obviously, like I said, if you clicked on this video, that's what you're here for. If you go through though and scroll literally here on Google and just take a look in the news article, news area on Facebook, when you scroll in and type in Robinhood, you literally see Robinhood trading app, fined for failures. That might be interesting. Robinhood introduces fractional trading. Something they're trying to get money for. Robinhood lets users invest with as little as $1. Here's what this means to you. Oh, here's Robinhood to pay $1.25 million for violating FINRA trade rule. That's interesting. What's FINRA trade rule? That's something we should talk about. And then one more down here, red flags for Robinhood. So let's get started and just talk a little bit about what happened. Now, the irony of releasing this video is because almost 1 year ago today, it was roughly about a year ago, I released a video on why Robinhood was costing you money. And that was a very popular video. That was a video that if you click over here, look over here, did nearly 130,000 views this year. By far my largest video. Now, I received a lot of backlash. I got a lot of hate for that video. But one thing is certain, nothing is ever free. And if we take a look here at this article written by CNN Business, again, not the biggest fan of CNN, but this article really does the job well. As it says here, it says nothing is free, not even free trading. The point was driven home by failures uncovered by regulators at zero commission trading app Robinhood. FINRA, Wall Street self-regulator, fined Robinhood $1.25 million Thursday for sending customer trading orders to 4 broker dealers without guaranteeing the best price. So a couple important things we need to take out of this little paragraph. First thing, basically you need to understand that FINRA plays a role in ensuring the integrity of America's financial system. And while Wall Street does have a lot of corruption, FINRA claims to be trying to combat and curb a lot of that. In the United States, a financial industry regulatory authority is basically what FINRA stands for. It's a private corporation that acts as a self-regulatory organization. FINRA is a successor to the National Association of Securities Dealers. You're probably going, what's the difference between the SEC and FINRA? Well, SEC's primary job is to protect investors and maintain integrity of the securities market. This is a government branch. Basically, this is a government organization. FINRA is not. It's a not-for-profit entity and is the largest self-regulatory organization in the securities industry in the United States. So what's the bottom line? The SEC is responsible for ensuring fairness for the individual investor, and FINRA is responsible for overseeing virtually all U.S. stockbrokers and brokerage firms. So in order for a brokerage to basically get licensed and everything, it's got to go through FINRA in some way, shape, or form. So in order to understand what Robinhood did wrong, you need to understand what order flow is. As you can see right here from the chart, order flow is basically very simple. The investor contacts the broker to execute a trade, includes both buying and selling a security. That then goes to the broker. This one routes it to a third party and collects a fee for providing the order or the order flow to that market. Different markets include ARCA, NASDAQ, etc., etc. And a lot of you newer traders probably will have no idea what any of those things mean, but that's okay. It's good to know what a market maker is and understanding how the broker sends out your order into the market in order to get filled. This third party completes the transaction, fulfills the obligation to find the most favorable terms. As you can see right there, it says fulfills an obligation to find most favorable terms. And that is where Robinhood went wrong, and that's why they're getting fined. As it says down here a little bit further, third parties such as market makers and securities exchanges will pay the fee because they are able to aggregate orders and due to the scale of their trades, can buy at the bid prices and sell at the offer. This allows them to capture the spread while reducing risk. They basically make money on that few penny difference. Sometimes in different stocks, the margin or the spread can get very large, but normally the spread is only a few cents per share. So basically this is what Robinhood did. Robinhood sends retail trade orders to high-speed market makers that can profit off of lucrative information. Basically knowing where you buy and where you sell, Robinhood takes that information and then sells it to HFTs or high-frequency traders. These are bots, these are algorithms that can trade based off of the data that they know that you're going to be buying or selling a share at a specific price. By Robinhood selling them that data, they end up buying the share for a few fractions of a penny or a few pennies more, and then turning around and selling it to you and doing that hundreds of thousands of times. Now, like I said, sometimes it's only a few fractions of a penny, a few pennies here and there. Sometimes it can be 10 cents, sometimes it can be 15 cents, sometimes it can be several percentage points. And that's where Robinhood is not doing its fiduciary responsibility in providing the best route in order to send your order into the market. A lot of times they will simply give you the best route that pays them the most money. It's not fair, it's not right, and it's a practice they've been doing for a long time. And hopefully you've also been practicing smashing that thumbs up button. It helps out quite a bit. Now, when we talk about a $1.25 million fine, you gotta go, well, why is that not going to hurt Robinhood? Well, let's talk about it. Robinhood raised nearly $400 million in October in a deal that valued the startup at $8.8 billion according to PitchBook. What's the one factor in their soaring valuation? It's order flow. Robinhood's revenue from selling customer trades to high-frequency traders appears to be surging. Robinhood's estimated order flow revenue spiked 227% in 2018 to $69 million, according to a recent report by Alpha Tuition Research. Now, according to Fortune, one of Robinhood's competitors, the company's lifetime revenue to date is between $600 million and $650 million, while 20 to 25% of its current income comes from interest on consumer accounts and 55% from so-called order flow selling. Like I said, these are rebates kicked back to brokerages from market makers and other third parties that execute their orders. So now you're going, Cameron, why would Robinhood not stop this? Well, because they're in the process of trying to IPO or issue an initial public offering and make a lot of money. So stop me if you've heard this one. A tech company startup raises buckets of money at a crazy valuation, but then struggles to turn a profit. Along the way, investors discover the startup doesn't belong in the high margin world of tech companies at all, but is instead grinding it out in a low margin industry. This is the story of Uber, Lyft, and more recently WeWork. Now one wonders if the same fate will befall Robinhood, and we're seeing how they're becoming very stingy, very greedy, and trying to make more profit off of their consumer and also their client. I mean, take this article right here, for example, and some red flags that are happening. It says the company's mishaps have included announcing a savings product that would pay 3% interest, only to walk back the news after regulators warned it would be illegal. The product relaunched with a 2% rate much later. More recently, the news came from a potentially catastrophic bug that let users trade unlimited amounts on margin accounts. And again, these are some of the problems that are starting to appear and starting to fester on Robinhood right before they're trying to IPO. And this is why it boggles my mind that people are still using this app, because it costs you money. I know it doesn't seem like a lot, but it costs you money in the long run, especially as a new trader. If you start off with what seems easy, seems like it's free, and it's really not, and it's costing you a lot of money. While the few pennies per trade may not cost you a lot, it's the experience, it's the app. It's the fact that you're not learning to use charts nearly as well as you could if you were using another free commission broker. And I'm not paid by any of these, such as TD Ameritrade, E-Trade, or TradeZero, which is one of the brokers that I end up using for shorting. But again, I'm not plugging any of them. Do your own research. I'm simply just trying to tell you about Robinhood here. All right, you guys, and like I said at the beginning of the video, I'd love to have more of you in my private mentorship group, Young Money Investments. All you have to do to win a free month trial here and enter the giveaway is literally comment down below, Robinhood did what? Like the video, subscribe, and if you want, you can also go follow me on Young Money Investments at Instagram, but that's not a part of this free mentorship giveaway. And in the following video, I will announce the winner. I'll also pin it down below, so stay tuned for that. I hope to see you guys in the next video, and I can't wait to talk to you. Catch you in the comment section. Young Money, out! Catch you guys in the next one.